Hello and welcome to the Student Loan Planner Podcast. It's Travis, and today we're going to do something a little unusual. We're going to talk about the good and bad and the ugly of disability insurance. And to do this, I've got my brother, Dennis Hornsby, joining us today. What's going on, Dennis?
Hey, Travis. Thank you for having me on the podcast. It's exciting to be the first other Hornsby here.
Well, so before we get into your professional background, a couple years ago, Dennis, I hear that you were personally responsible for J.D. Vance becoming famous, the new vice presidential pick. Is that true?
That's pretty surprising. I worked background on the movie based off his memoir that he wrote, Hillbilly Elegy. And then Travis posted a screenshot of the movie on Facebook and said he was so proud of me. And then all the old people who were friends with on Facebook thought I was the main character in the movie,
Yeah,
Mr.
so
J.D.
hilarious.
Vance himself.
It was Dennis's first job. He also does a little bit of professional acting on the side. So that was Dennis's first job years ago as a paid actor. Was that Ron Howard movie? Kind of before everybody knew who J.D. Vance even was. So that's like a little inside family joke here. We've got a lot of professional stuff to talk about too. I just thought I'd warm the people up here because disability insurance can be like pulling teeth maybe to some people. But I actually think it's really important to talk about at least for one episode. So for your professional background, Dennis, share a little bit how you got started out as a student loan planner consultant, and just also maybe about your some of your qualifications, beef yourself up a little bit, brag about your perfect SAT score, Dennis, and how you're smarter than me.
So my background is I got a bachelor in civil engineering at the University of Florida. I did get a perfect math SAT score. That's my claim to fame. I'm not just a pretty face. I've got theoretically a bigger brain than Travis. But I didn't start SLP, so how good is it? But anyway, I was traveling the world for a bit, a couple months in New Zealand and Australia, and was just kind of not sure what to do professionally. And then Travis got to me while I was thinking about the future, and he was like, I think it's time you join SLP. And I didn't have any better plans, so I was like, well, might as well give it a shot and do my best and see how much can I really do. And I ended up being one of the top 3 highest reviewed consultants on the team while I was doing student loan planning there. I advised on more than $50 million of student debt. And then Travis decided to open up an insurance branch of the company. And I leapt at the opportunity to do that because I thought it'd be interesting to be the main honcho like Travis is.
Well, and I'm Dennis's bigger brother, right? And so my biggest concern was that I wasn't gonna be hard enough on him when I brought him onto the SLP team. So I was like, Dennis, if you're not one of like the freaking top consultants of the whole company, I'm gonna can your butt. And he listened, and I'm real proud of him. And he only occasionally gives me some jokes and little brother annoyances, right, Dennis?
Yeah, he's still the big brother. I get disability leads coming in at 11 p.m. and Travis will text me and be like, respond to that ophthalmologist now. And I'm like, It's my bedtime.
It's ophthalmologist, Dennis. Ophthalmologist. Optometrists is, it's you have to be very distinct. I'm just kidding. Hopefully you enjoy this podcast just because it's me and Dennis going back and forth. But we do have a point to this podcast. It is to talk in depth about disability insurance and stuff you really do need to know. So, at a high level, the reason I wanted us to do disability insurance as a company is not because I just view it as revenue source. I think that it's because there's student loan specific considerations that people really do need to think about, right? So Dennis, maybe at a high level, can you talk about how, so obviously some student loan borrowers have federal loans, some have private loans where disability, like that might come into planning for the disability side of things, whereas maybe for the federal loans, they don't. So could you just talk about some of the unique considerations that, student loan specific situations that you see with disability insurance where people need to be aware of that?
Yeah, so it might make sense first to start off from a broader perspective and just define
Sure.
what disability insurance is for people out there. So disability insurance is if you are disabled, they pay you a replacement of your income. Basically, they'll cover you up to 60% of your pre-tax income. If you're paying the premiums yourself, that becomes tax-free income in the future. So it'll be relatively close to what your take-home pay was before. So you're able to live proportionally the same lifestyle, hopefully, before you became disabled. If you have a group plan at work and your employer pays the premiums, that would be taxable income if you ever needed to rely on it. So individual policies are extremely important to get. Now, where this relates to student loans is for people who have all federal debt. If you are ever totally permanently disabled, the government will just wipe away your debt. And that's if you never recover from your disability. Now, if you had private student loans, that's not the case.
Yeah, well, and can we talk about that a little bit? So, like, a lot of people think that they have coverage at work, right? And who we see most often buy disability insurance, individual policies or professionals, right? Medical professionals mostly, not entirely,
Mhm.
but mostly, physicians, dentists, veterinarians, those kind of folks, right? And when people have a group policy, I guess the way I think about those group policies is like your employer wants to make sure you're good if you're in a wheelchair, right? Like you can't do anything at all. Whereas if you just, break your hand, you can't operate anymore, like some very specific procedure, like the group employer might have ONOC coverage, but a lot of the times these definitions that you see in these group policies that people have at work are pretty weak definitions of what constitutes a disability, right? So could you talk a little bit about like the differences between, like we can talk about own occupation in a second, but what do you see the big differences are between a group policy and a policy you purchase yourself?
Well, so a very common definition of disability with group insurance is 24 months own occupation, then any reasonable occupation thereafter. So if we're going back to a surgeon, if you had something happen to your hands, if you develop hand tremors or something like that, you're not going to be able to do surgery anymore. Maybe you could still teach at a med school or something like that. Own occupation would pay you your full disability benefits alongside your salary that you're still earning at the new job. But if you have a 24 months own occupation policy and you're 3 years now from your disability, they're going to reduce benefits if you're working another job. So you get reduced benefits for that. I did want to go back to the student loans from earlier because
Sure.
to finish that thought of why it's important, there is a rider called the student loan rider with four of the five big disability companies. Principal is the only one that does not carry it, but Guardian, MassMutual, Standard, Ameritas, they all offer it. And basically, if you're disabled, they pay an additional amount towards your student loans every single month, which can be really important if you have private student loans. If you're on an income driven repayment plan on a federal plan, this benefit is tax free if you're getting it. So you can recertify your income. You don't owe anything anymore for your monthly payment. But if you have private student loans, maybe you have like a 2,000 a month student loan payment required on private loans. And if you're a physician, now that extra 2,000 is having to come out of your benefit if you're disabled, if you don't have the student loan rider. So if you have all federal loans, no plans to ever refinance, then you probably don't need it. If you're going for forgiveness 100%, if you might refinance in the future or you have private loans, then I'd probably recommend having the student loan rider.
So like when I think about disability insurance, like what the heck is it? Like why do people buy it, right? Like so I kind of view a lot of our clients as kind of being at the 20-yard line in terms of financial success in life, and all you got to do is kick a field goal and win the game, win the football game, right? That's all you got to do, right? And what happens is like a disability can be like fumbling the football and having to still make the field goal, right? Like it's just this big unplanned thing that's like very difficult. And so like some people call disability insurance income protection, where you're protecting your income while you're working. So can you just explain like what even is like this at a high level? Like what is income protection? Like somebody goes to med school for 4 years, is in residency, right? Like what are they really buying? Like what is disability insurance? Why do especially so many physicians buy it? And maybe why do you think so many physicians buy it, whereas maybe something like pharmacists, like a lot lower percent of that profession buys it, but there's still a decent amount that do, but it's not as high as physicians. So can you like kind of explain that at a high level?
Sure. So these actually did used to be called income protection policies. Now they're called disability insurance. Doesn't really matter, but in the grand scheme of things, it's basically just protecting your lifestyle. If you are a doctor or a dentist who has this very highly specialized education, you spent, possibly a decade in school getting to this point. You took on hundreds of thousands of dollars of student debt to be able to earn this really high income that you can now earn. The most catastrophic thing would not being able to earn that income anymore. Because, realistically, you have a very specialized education. If you can't do that one thing that you were trained to do, what could you feasibly do that would give you access to the same, six-figure income? Like if you're a surgeon, where else can you make $500,000 a year? So the most important thing is because, we see it a lot with a lot of physicians, lifestyle creep is a real thing. You
Yeah.
get a huge salary, you sign up for a big mortgage, you want a nice car. There's nothing wrong with that. It's just if you're no longer earning that large salary, that's how foreclosures happen. That's how car repos happen.
Yeah, I mean,
I
like
saw a
just to put this
statistic
in.
where, well,
Yeah, go ahead.
foreclosures, the majority of foreclosures are because of disability.
I didn't know that.
Because
The majority,
because somebody, well, I'd have to look up that statistic again. A lot of them. I want to say at
a
least
lot. Well,
25%.
plurality. You could probably say the plurality, right? Like we don't know if it's over
Yeah.
50%, but it's definitely the number one cause. So I mean, think about this in numbers, right? Like when we bought our house, it was like a, I don't know, 700-800 grand kind of house, like just like a typical house that a lot of like doctor kind of people might buy. It was like a 3,000 something a month mortgage, but with higher interest rates, that's double. That's like a 6 or 7,000 a month mortgage if you bought the same house today. And with higher prices of houses, like if we bought our house today instead of like back when we bought it, then like that mortgage cost for us probably like 8-9,000 a month. And a lot of physicians or dentists or higher income professionals, right? They'll buy like their first starter home and then they'll upgrade like when they're a few years in, then they'll buy like $1.2 million house, or if they're in California, New York, right, like 1.5, 1.8, something like that. And so you get a mortgage payment that's like 10, 12, 13,000, 15,000 a month, right? And so I guess my if you just look at the math, if anything happens to your ability to continue making an income with your hands, then like if you don't have an occupation disability insurance, you're in big trouble, right? I mean, that's my guess is that's why so many higher income medical professionals buy it, and more
Yeah.
like middle income medical professionals sometimes don't. But what do you think?
I would say, yeah, that's a big reason. I would say another thing that like I don't ever really talk about, but probably should be something in the back of everyone's mind is, divorce is a real problem as well. You know, people frequently leave their spouses if they become disabled for like
Yeah,
a long period of time. And then if you don't have one of these policies, you don't have that other person's income to rely on anymore either. Um, you'd be in a really bad place.
yeah. Well,
Um,
I mean, my wife's a physician. A lot of her identity is tied up in being an excellent physician, right? So I would imagine a
mhm.
lot of people that listening probably feel the same way. Like their profession is a key part of their identity, and if you lose your ability to practice or work, then it's not just risk your spouse leaves you. A lot of times you feel depressed, right? You feel like a piece of yourself is gone, and so I think that makes sense. Like if you think about divorce being a real problem that happens when people get disabled, that's something that happens. You have to protect against that, right? Or you don't have to, but it's a good idea to protect against that because ultimately we'd like to think that we really know our spouse and that would never happen to me, but like statistically, that's it. It's not the case, right?
Yeah, and it's like a similar problem to where like if you're in a couple, one of you is a surgeon, the other is a stay-at-home parent or something. If the surgeon were to die, that's why we want life insurance for that, because that's the person the family is depending on to pay off your mortgage, to pay for your children's education, stuff like that. If you don't have a life insurance policy, similar problem in that perspective.
So, a lot of to switch gears a little bit. So, say somebody thinks that at least getting income protection for some amount of money is a good idea. So, let's talk about residents and fellows first, and like
Hmm.
people finishing residency and fellowship, and
Hmm.
maybe people, anybody who's like going through a big transition. It's like a physician or a dentist, and maybe a board certified veterinarian as well, right? Like, so anybody that's going through this big transition where they're either entering training or exiting training, can you talk a little bit about this June 30th date that sometimes gets thrown out there by like people that are trying to push you into disability insurance policies with them? So what is this June 30th date? It's already passed, right? But people will maybe use a different date. They might use September or something like that, right? To try to lure you into submitting an application with them.
Hmm.
So can you talk about what is this date marketed as a lot of the times and what's the truth in that?
Yeah, sure. Let's get back to the good, bad, and the ugly for a second. So this June 30th deadline that you might have heard of is a deadline that gets thrown around of you have to buy disability insurance before you finish your residency to get the residency or fellowship discount. Frequently, you'll have at least a 20% discount available through one of the five insurance companies if you buy um, right before finishing your residency or fellowship, or closely thereafter. So people will say you have to buy it before June 30th. Realistically, that's not the case. Even if you're finishing your residency, you can still get it after June 30th, the residency discount. It's going to be different among the different insurance companies, but as of today, I checked. and Mass Mutual will still give it to you up until September 30th of the year that you finish residency. The other four, Emeritus, Standard, Principal, Guardian, they will give it to you until December 30th.
That's great. So in other words, people
Now,
can still get those discounts. They don't have to feel like they missed out on anything, right?
yeah, and I do want to check my notes real quick and make sure that I said that right, because it is different if it's a GSI versus just a regular residency discount. Do you want to tell them what GSI stands for while I check my notes real quick?
Sure. I mean, a GSI policy is guaranteed standard issue. So guaranteed standard issue is basically when your residency program has, some sort of special no or limited question underwriting kind of thing that goes on. Is that right? Did I say that right?
Yeah,
GSI,
so
can you explain it?
Yeah, so GSI is guaranteed standard issue. This is extremely important for some of you if you have any pre-existing medical conditions. Basically, this is a policy that is an agreement between the residency program and an insurance company that they will take every resident who applies for this policy with zero medical underwriting. So they will accept every single person from your residency that applies for it. And the trade-off is this is usually more expensive, pretty much in every case, unless it's a unisex policy and you're a woman. Another dirty secret of the industry, women pay a lot more for disability insurance than men do. I think part of that relates to, the complications of pregnancy that are possible and the disabilities that can result from that. Women
But
do
not
pay
always,
less for
right?
life insurance, at least. Sorry, what?
Yeah. Well, I mean, not always. I mean, usually, right? But I mean, if you have a GSI policy that's got a decent discount and it's unisex, are you confident, that a male would always be able to get a better rate than that? And what kind of questions does somebody need to ask
Well,
first before they do something that risks that GSI policy that they could get through their fellowship program or residency program instead?
Well, just in general, women pay more for disability insurance than men do. So if there is a unisex program available to you, that's going to like average out the rates. So a woman would pay less by signing up for a unisex rate. A man would pay more by signing up for a unisex rate. That's why these programs don't really exist much anymore, because the insurance companies figured that out. Oh, only women are signing up for this. No men are. Um, Now, for getting back to the GSIs, these are important because if you do apply for, and the reason they're more expensive is because the company has to offset the risk of basically all the people who are applying for it are not an ideal risk, right?
Right. Like
They're
if
usually
only
not
if
healthy people
like
completely.
if you had a no underwriting policy through your residency program and like they have to do something to avoid only sick people or only people with pre-existing conditions signing up for that program, right? Or else it'd have to be really expensive. So like a GSI policy, like what does a broker sometimes do that like puts everything at risk for you being able to qualify for disability insurance with these policies?
So the number one thing that people could mess up in is, people want the non-GSI policy because it's cheaper. You can customize the riders that are on it. So it's ideally better than a GSI policy. But if you sign up for one of these policies, if you apply for
Even
the
if you apply.
policy, well, that is what you're doing. You're applying for the policy. Whenever you like say you wanted there's a GSI available for your program. We'll say there's a GSI program available for you at company A, but you decide to sign up for an individual policy with company B because it's cheaper. Company B finds something in your medical history that they find objectionable, and they don't want to take you. They decline you. Company A will now no longer take you for their GSI policy because you've already shown that you're not insurable. So, and you applied for another company first. There
So
are rare exceptions where you can apply for an individual policy at a company if it is the same company that offers the GSI program at your
right,
institution.
right. So what do like unethical brokers do that are trying to make a commission, that potentially causes people to become uninsurable? What happens in the industry? This is called the good, bad, and the ugly of disability insurance. So we need to share some of the dirty laundry here.
And if I was trying to be like bad Dennis, what I would do is I would apply for this individual policy because I don't own the GSI at your program. I'm not going to get paid for it because they are exclusive to brokers. Sometimes those brokers don't want to split commission. If I refer you to a GSI policy because I can't sell it and I think you need it, that other broker might not even comp me at all for it. I might not get paid at all. I might have just lost a client and got paid nothing. And you just have to hope that the broker that you're working with has that sense of right and wrong of this is right for the client. I'm going to pass them off because it's the right thing to do for them, and not like I'm going to try and sign them up for a policy because I want my money. I want this, future cardiologist on my client list who's going to pay a lot of additional premium in the future.
Yeah, I mean,
Because
this can be a big monetary temptation, right? If somebody's not doing the right thing. I mean, frankly, that's one of the reasons I wanted to hire you for this, is because I know I can trust you that you're going to do the right thing for clients, and I know where you live if you don't, right? I mean, so I think I think that the temptation is very real, right? Because I mean, can you share, like, I mean, I guess I'll share, like, just like the commission structure for disability insurance, right? Like, agent's going to make maybe like 60 to 85% of whatever the first year premium is in the first year. And they're going to maybe get some sort of like recurring kind of small percent of the premium on ongoing years. So if you have somebody who's like a high paid specialty, then, then they might just push you into a policy, right? In the hopes that it is cheaper for you, right? Especially males, right? They might rationalize it in their head. Well, this policy is probably going to be cheaper, right? And so they just try to, a lot of times too, what happens is whoever, like, a lot of times people will shop like, two or three people, and they'll just apply whoever answers first. That's another thing in the industry, is like everybody's got pretty much the same pricing. Not always. Some of these GSI policies are out there with unique discounts, but like any ethical agent's going to look for that first based off of your program, and then double check that like that's not a better deal than what they can offer you first before they have you apply for that other individual policy where you would not be able to get any kind of GSI policy, which is really discounted, right? So, I mean, ultimately, it's about getting the cheapest premium possible for the coverage you need. That's what the point of disability insurance is, right? So, I think that we maybe got a little too technical. Basically, GSI is like this thing where it's just, your residency per program has a special deal. Go talk to the person, right? And the point is not every program has that, and when they do have it, it's not always the best idea for the client. But you do kind of want an independent broker going through this with you, right? Because that way the independent broker can show you everything, and as long as the independent broker is ethical, then they're going to compare whatever they can offer you to what somebody else could offer you, and you don't get a whole lot of benefit from shopping around unless you're talking to somebody who's unethical, pretty much. I mean, what do you think about that take?
Yeah, I think it's extremely important to have an ethical agent on your side. There's plenty of times where I take a look at other policies that people have applied for or are thinking about replacing. And, I could lie to them and tell them that you should just buy a policy from me. But there are plenty of times where, like, oh, the policy they have is the one they should keep. Or you should replace that policy because, like, say you're a dentist, you just finished you have an AEGD or GPR. One of those 5 companies actually considers that to be a better risk classification than just a regular general dentist, and the other 4 companies don't care about it. And you could possibly save, thousands per year by switching to a different company because you have that advanced degree. This is all random stuff to think about as an agent. In terms of like how we get comped, like some of the companies comp better than others. Which might be why so many agents recommend one particular company, because they comp them over the lifetime of the policy. As long as you keep the policy, they pay them every single year. There's another company that pays for nice trips if you hit a certain level of sales.
Yeah.
So there's definitely a lot of things to look out for where these companies are trying to incentivize agents to sell their particular product.
And
They
you get
don't
better
want you to
payouts,
sell
right?
different
Like,
ones.
there's different payout grids if you hit certain levels of production with certain companies too. Like that's another kind of conflict of interest, right? So, I mean, I also, I mean, we looked into trying to rebate part of the commission, kind of like we did on student loan refinancing. We're known on student loan refinancing back when lots of people were doing that, for taking some of the advertising commission we were earning on that and rebating it back to the client. But for insurance, it's kind of hilarious that this is the rule, but for insurance, that's illegal. That's highly illegal. You cannot
Yep.
rebate any of the commission that you earn as an insurance agent back to the client, which is effectively prohibition against price competition, right? I mean, I think it's a stupid rule. I think it's ridiculous. I think that their point is that they don't want somebody to sign up for, a policy that doesn't understand it because they got, a $500 gift card or something, and then they signed up for some whole life thing they don't understand. I think that the regulators, that's probably the reason that they're doing it, but it also prohibits any price competition on how much commission your agent's going to get paid from the insurance company at all, right?
Well,
So
there's also like a big like money laundering problem in insurance, life insurance, especially where
yeah.
there's like drug cartels laundering money via whole life policies by buying a new whole life
Wow.
policy and canceling it and taking all the surrender cash
Have you
value.
have you seen Ozark, the series on
I've
Netflix?
watched Ozark. Great.
Yeah, so you don't want to be the whole life agent that ends up in an acid bucket from the cartels, right?
Yeah, I've just been on the watch out for that of
Yeah.
people
No, but
canceling
I
whole
mean,
life
so
policies.
well, for disability insurance, it is a lot more expensive than term life coverage, right? So can you talk about like why is disability insurance a lot more expensive than term life?
So disability insurance is like a general rule of thumb is going to cost you between 1% to 4% of your annual income, which is we're talking about a lot of money, right? If you're a surgeon earning four hundred
But
thousand
that's
a year,
but
it would
that's if
be
you're protecting all of your income. Like some people don't protect their whole income, right? They protect a part of it. But yeah,
some people
like
do, but I wouldn't recommend that because then you're going to have to change your lifestyle in a big way if you became disabled. Um,
sure.
because like the whole point of this is to actually protect you, not to sell you some substandard thing that if you ever end up needing it, it's actually not going to be sufficient, and then you're going to be angry at me and possibly sue me because I let you buy it.
Yeah. So, I mean, in terms of, let's say somebody doesn't have coverage, like any time in residency or fellowship is a great time to look into coverage, right? Because the sooner you get it, the better. Is that generally correct?
Yeah, and then I forgot to mention the GSI deadlines are different from the residency discount deadlines.
Hmm. Interesting.
The GSI deadlines are going to be different based off of the company. Um, I remember them earlier.
Well, that's okay. I mean, I don't think people need that kind of level of technical information. I mean, like it is individualized, it is personalized to the person, right? So, I mean, let's say somebody doesn't have any coverage at all. Just to repeat my question, right? Like somebody's in the middle of training, like any time during training is a great time to get a policy in place, correct?
Yeah, and ideally the best time to buy it is when you're younger, because you get younger rates. You lock in the rates of the policy when you buy it. When you're a resident, early on in your training before the final year, you qualify for $5,000 a month of benefits. Every year that you wait to buy the policy, your rates are going to go up by $10 to $20 per month, which is, it's not horrible when we're talking about a physician who's going to have a six-figure income in the future. Why not wait 4 years to buy it, right? The main problem would be if you develop any medical problems over that 4 year period. When you buy your policy, you lock in the ability to increase it in the future, regardless of your medical history. They cannot do any more medical underwriting on you after you already buy the policy. So that's the main problem. If you don't buy this policy when you're like, 26 and you decide to buy it instead when you're 31, a lot of things could happen over that time period that make you uninsurable, right? Like schizophrenia develops a lot of time in your late 20s, possibly joint issues. If you were in a skiing accident and then you had to get like screws in your wrist or something and you're a dentist, they might exclude the wrist from your definitions of disability. As a dentist, that'd probably be the thing that I would most want insured, right?
Yeah. Yeah. Maybe back. That's one that comes up a lot. People being,
Mm-hmm.
leaning over, having to do stuff. So for, for people that are thinking about disability insurance or thinking about getting a review of it. So, I mean, I guess for my take would be, if you can get it, the sooner you get it, the better, right? It's just something to take off the list. It's okay to not have a very high savings rate in residency. Like if I had to put, an order of things, I mean, I would get, an emergency fund without credit card debt first. And once you have like a minimal emergency fund and credit card debt, if you are in one of the, higher income medical professions, you need to lock it down as soon as you can because it just keeps getting more and more expensive every single year, right? And if you want to shop around agents, you can. Although I will be shocked if you find a vastly different price from anywhere else, simply because we have a lot of volume. We have access to the best volume-based discounts. And if we don't, it's going to be one of these GSI situations where some random like Stanford residency program has got a unbeatable discount, right? That we're going to research and let you know about. So can you talk about the experience that a client gets from you when they reach out to either get a quote when they don't have coverage or if they have existing coverage? Like, what does the process look like? What does it feel like for the client?
Yeah, so from the client's perspective, you submit a request form asking for some disability insurance quotes. Um, got a couple up on the screen now. Got to do after I hang up here. But I review that because there's spots for you to put a bunch of different information that I need to know, like are you a resident or fellow? When do you finish? What program are you at? And then what I think is probably the most important here is when it asks you to list any medical conditions. If you would voluntarily tell them to me. That's extremely important because the different insurance companies view conditions differently. Um, Something that company A might consider uninsurable, company B might think is fine. And so it's extremely important not to just quote everyone willy nilly, assuming all these companies are going to be fine with it. So what I try to do is if I can learn as much about your medical history as possible, I take that information, I go to the insurance companies and I say, hey, hypothetically, how would you view a person with these issues?
Right. So you
And
can do
then,
this without eliminating somebody's GSI eligibility, right? Like you
correct,
can,
this does not, eliminate your GSI eligibility. It doesn't violate HIPAA because I'm not saying your name or anything like that. So this is just me getting a better idea of how these companies are going to view you. They might all come back with negative opinions about it. And then I can tell you for certainty, well, you should sign up for your more expensive GSI program that I can't sell to you. That's going to be the best option for you.
yeah.
And I
I
think
mean,
that's a great thing to have peace of mind of knowing the policy that you're buying is the best one.
and we want people to treat you like they would treat their defense attorney, right? Which is tell them everything, tell your lawyer everything, tell your disability insurance agent everything, right? Like tell
Please tell
them,
me everything. We're going to end up with like a month of back and forth, and then you're going to get declined in the end, and we're going to have wasted both of our time if you're not transparent with me.
well, because ultimately what happens, right, is if somebody doesn't tell you something and they get approved, then if they have a claim, right, and it's about something that they didn't let the insurance company know about, if the insurance company's on the hook for, $1 million+ over the next 30 years, right, which a lot of these policies go until 65. So the insurance company is obviously going to do their due diligence to make sure that, you didn't hide something like, because a lot of people could just, you know, get the coverage and then have a claim a year later, right? And then what's going to happen is they might try to not cover it, and then you just paid premiums for nothing, right? So that's
Yeah,
why you tell everybody everything.
if you tried to hide a pre-existing condition and then later on for some reason the company doesn't find it, they approve you for the policy, and then later on down the road you're disabled and you try and claim based off of that, if it's a pre-existing condition that you concealed, they're not going to pay benefits for it. And I'd be shocked if the insurance company didn't find out about it in the first place. They're kind of like Big Brother when it comes to underwriting. They will find out everything in your medical history, even things that you've forgotten about, and they can also see every prescription medication that you're taking. Like even if you've done like these like online prescription prescribing companies, they have access to that too.
And if you have like mental health issues, right? Like it's just better to disclose it. It's better to disclose it because certain companies will treat stuff like that differently with different limitations, right? Like some companies won't cover it all, some places will, right, Dennis? Is that correct?
Yes, it'll depend on, you know, are you taking medications for it? How long have you been having these issues? Like, and I had a client recently that had an issue, but it's so far in the past that some of the companies were willing to not have that as an exclusion on his policy. Others still considered it to be a problem. And so that's another reason why, like, that would be tough for me to like disclose to somebody that I don't know about that. But the fact they told me about it allowed me to check with these companies and figure out that some of them would have not been as good for him as others.
Yeah. I mean, ultimately, like it is very individualized. And since you're not allowed to compete on price with disability insurance, like you have to compete on knowledge for the specific situation that you're in. And so our clients do tend to have student loan debt, right? Like not all of them, but a lot of them do for obvious reasons. And, we're going to look at, we also have a financial planning company, right? So we're going to be looking at you know, your needs, your wants. We're going to figure out what amount of coverage you probably need to get. We have a lot of team members with SLP insurance, like people on our team that are very large insurance producers, right? And agents and stuff that we draw on for expertise when we're not sure about something. So we have like the top level expertise in our team Uh, collectively, everybody that's affiliated with SLP Insurance has something like, I don't even know, 30 years experience. You are obviously newer to the business, but you're a very quick study. And like I said, we try to bring in, you know, other outside experts whenever we have a complex situation, like, and somebody I think had, I don't know, 600,000 of income or something like that and needed to get two different policies the other day or something like that. Can you think of any
You
like
know,
complicated cases you've handled?
I was just thinking I totally forgot to mention my qualifications at the beginning, that I'm now licensed in all 50 states in the US for
Yeah,
life and disability insurance.
there you go.
Somehow you can
But
put that at the
but
beginning, that'd be great.
sure. But what big like what are some of the craziest like cases at a high level that you've had to figure out lately?
Craziest case at a high level. Um,
Put you on the spot
I
there.
mean, it's not crazy, but like one thing I'm pretty proud of is I had recently a client who was a physician in Oregon, and he was quoting them policies. One of the companies looked like it was going to be the best. We were like ready to apply for it. And then I don't know why, I decided to do some digging one day, and I found that there was a 10% discount additionally with the Oregon Medical Association. That was the only state medical association that had a discount with this insurance company. And it got them, an additional 10% discount on their policy, which came out to a little over $1,000 per year.
That's great.
And then it took a lot of back and forth with the insurance company to get them to honor it for some reason. Um, like I had to get them to sign a form like swearing that they're a member of the Oregon Medical Association. Um,
Yeah, I mean, insurance companies are insurance companies. Like the 1990s called it once their technology back, right? And disability
oh,
insurance is a pretty niche product, so they don't invest very much money in tech for this line of business, right?
yeah. There was another crazy one I did remember of we were about to apply for a client's disability insurance policy. And then the same day that we were going to apply, he got injured at work
Wow.
and then had to get an MRI. And they found something in the MRI that could point to some sort of medical condition. And then the company would now no longer take him. But they said they would reconsider it in 6 months as long as the follow up MRI is all clear. Um, so that just kind of shows why you want to do this sooner rather than later, because crazy stuff happens and then it can mess up this whole thing. Um,
Yeah.
I'm still hope that guy that all comes back okay. Because if it doesn't come back okay, then we might have a big problem in his case.
Well, I mean, and that's, it, like you said, just get it in place as soon as you can. The price is going up every year. You don't do it, and then ultimately cancel it when you feel like you don't need it anymore. You feel pretty confident that you're financially independent. We have my wife and I have a decent net worth, and we still have her policy. And the reason is just because we figure that it can't hurt to have that extra coverage until we were extremely financially independent. Just because if something happens tomorrow, they're on the hook for, I don't even know. I think it's like 12K a month or something like that for the rest of her life, inflation adjusted until she's 65. So that's like, that's 30 years of coverage. And, we'll dump it eventually, but we'll wait until we're financially independent, like, in spades before we get rid of it. So let's just say that somebody wants to talk to you about their disability insurance policy. They can email you, right? Dennis@studentloanplanner.com. So they can send you an email directly. Or if they just want to send the quote information over right away and you'll see that and you'll respond to that, they can go to studentloanplanner.com/quote. So studentloanplanner.com/quote. And yeah, any last things you want to say?
Um, I think that's all good. Feel
Cool.
free to email me if you have any questions about your policies. I'm happy to look them over for you or have a meeting. You never pay me anything for my services. I get compensated by the insurance companies for selling policies and for servicing them in the future. But, because I'm getting paid to service them in the future, that also incentivizes me to sell you the best policy possible, because I don't want you to cancel this. I want it to be the thing that is right for you and something that you will keep. And if the worst happens to the worst, I would be the agent in charge of servicing your policy. So I would help you submit claims or anything like that in the future.
Yeah, and I mean, so I think that's and because we have enough volume, right? We're not trying to worry about closing any one particular case, so we don't mind at all if you end up the right thing for you is not buying a policy or buying a different policy, we'll let you know that. So 10 to 30% discounts through SLP Insurance on disability insurance. You do need to take action for a lot of people by September to get some of the best discounts for people who just recently finished up training. So that's, again, Dennis@studentloanplanner.com is your email, and then you can get the quote form at studentloanplanner.com/quote. Thanks, everybody, for listening to the Student Loan Planner podcast. We'll have more for you next week.